Welcome to this week's Money Metals podcast, helping precious metals investors during these treacherous times. Now, here's this week's market wrap with commentary and analysis from the fastest growing precious metals dealer in America, Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. I'm happy to welcome back our friend David Morgan of the Morgan Report and silver-investor.com. David, since we haven't gotten together since last fall, I guess a belated Happy New Year. It's good to talk to you again. How are you?
I'm doing well. Thank you, Mike.
Well, let's get right to it here today because we've got a lot of things to cover as usual. First off, we've had a very positive start to the year for gold and silver, although the metals are getting hit pretty hard today as we're talking here on Thursday afternoon. So what do you make of the market action so far this year, and especially this pullback that we're seeing today, which I understand had mostly to do with them raising margin requirements? Is that it?
That certainly plays into it quite a bit. Constructive is the word I would use. It's been constructive. I think the lows are in finally for both gold and silver. The end of last year, we had a spike low in silver and one that was similar in gold. And we've been building up from there, not ignoring today's action with silver off $1 and gold off 25, but that's constructive, really, meaning that, all markets go up and down, regardless of the cause, manipulation, margin requirement increases, good news, bad news on the general economy, et cetera. The trend has been up. It's been strong. The volumes have started to look pretty decent. And so I think that we're going to have a better year this year than we've had for the last three in gold and the last four in silver. So it's going to be a barn-burning year in my view, but it'll be a constructive year with higher prices.
Last time we spoke, you had mentioned the mining industry was taking a terrible beating given the prolonged period of low spot prices in the futures markets. Now, obviously, you report on a handful of companies that are still doing well, but most, you said, are really struggling and they're scaling back production or even going out of business altogether. So what's the latest there?
Well, to back up, you're correct with what you said. The Morgan Report did an analysis on all the companies that we profile currently, and the top tier, mid-tier, and speculative section. And we picked found the two best in each category. So people like ultra-conservative investors, mildly conservative investors, and speculators. And most investors, sprinkle their portfolio with all three sections. And found the most undervalued companies. And a couple of those, in fact, even the top tier up like 30-40% from when we put out the report for the January issue. They're all off today, with the soft in the metals today. But the real value is really there, but I don't want to say anything that isn't consistent with what I've said for many years, and that is really to start a metals portfolio, you have to have the precious metal first. But in a way, if you want to catch up to the people that were able to buy silver at $5 and gold at $250 or $300, the way to do that is to find the right mining companies today at very, very undervalued positions and buy into them. And certainly not, you have to buy more than one, obviously, for lots of reasons. But a good core holding of even like 6 companies would be something that has a lot of leverage to the metal. As far as the companies going out of business, et cetera, that still is on table. Many of these companies that were in the junior category are out of business. The ones that are hanging on, many of them like moved offices, 2 or 3 companies are in one office, so they share the secretary and expenses that way. And these companies in Vancouver, which is the junior resource capital of the world, certainly have been through hard times before, and they know how to ebb and flow with market conditions. And most of them that are viable will do everything they possibly can to stay in business. But some of them are, good prospects or have proven up enough to maybe be less risky than others, let's say. And they can be M&A, a merger and acquisition type of an effort or something else. So there's still plenty to look forward to in the mining sector from the junior space all the way up to the top tier producers. But the field is getting narrowed, and the problem with gold and silver companies is that for the average company, we're right near the cost of production still. I mean, gold somewhere And it varies company to company, but rule of thumb around the $14.50 level, silver somewhere around the $20 level, all in cost, of course, and we're below those levels. So these companies can't go on forever at those prices, but they certainly will continue to operate for quite some time.
Kind of staying on that topic here with the mining industry and cost of production and so forth, I want to ask you about some of the figures you put out on true all-in cost of silver production. I think you recently reported that for some it's closer to $24, which is higher than I've seen some other people report. Talk about the reasons how you came up with that number. Some have put $15 to $20 as sort of an average all-in cost of production, but you factor the whole picture there, don't you?
Right, and we looked. First of all, you have to set up the parameters. What are the givens? The givens are we're looking at only primary silver producers. We're not looking at big conglomerates like BHP or RTZ or one of these multinational companies that mine base metals, and silver's a credit to them. So we're talking about companies that make their living by mining silver, and that would mean that at least 50% or more of the revenue to the bottom line is due to silver mining. And there's no such thing as a pure silver mine. I mean, First Majestic, Tahoe Resources, Endeavor Silver, U.S. Silver, Hecla Mining, Coeur d'Alene, you name it. They all mine silver, but they mine lead, zinc, and copper, or some variation thereof throughout the industry. So there's no such thing as a mine that only mines silver only, although First Majestic is pretty close. I think they're about 90% exposure to silver. Regardless, you have to look at those companies, and that's a handful. I mean, you can put it on your two hands and have some fingers left over. And then you've got to look at, all the costs, and we do the analysis. But the one thing that most leave out in the all-in cost, even some of our friends in the business, is the tax situation. Because a lot of these companies have like a carry loss that they can take advantage of, and that's good for the years that they have a loss from situations like we're currently in, where they're mining at a loss, and they take that loss against their production, and it helps them from an overall cost standpoint for that year or a few years. But the years where they're making money, when silver was at like $30 an ounce, their costs are 24, let's say. Obviously, they've got tax base. So we look at that cost as well. Since it is a true cost, we realize it's not an every year thing. One thing I'll say that, we came in with about 22. I mean, it varies again company to company. But what I'll say is that number may be a bit high now, Mike, because when we did the last analysis, and we can update it, it may drop to 20. About 25% of the cost on a fully operating mine, and again, this is rule of thumb, it isn't every mine, is energy. And so since we've seen such a drastic drop in the price of oil, the true all-in costs are going to be less, not more, because that's a huge part of the budget, and it's dropped substantially. So, are my numbers high? Yeah, they're right now. But, all you can do is all you can do with the absolute, factual information at the time. Does it vary? Sure, it varies. I mean, how much does it cost to heat your house or, run your car or whatever? It's different now than it was 6 months ago.
Gold and silver have held up pretty well, while oil has, of course, taken a major hit here. Does that surprise you at all?
It's not a big surprise to me, and the reason being is that having studied, this sector for so long, and also having lived through one major market in the past in the metals, along with a couple of bull markets in the stock market, we have observed that when we get near the end game, meaning where gold asserts itself as the ultimate currency against everything else, you will see like the dollar going up, which is probably the most perceived safe haven investment that there is, going higher against all other currencies, and at the same time gold going up along with it. And this is contrary to a lot of thinking, because there's a lot of my peers that basically make the case that they're inversely related. Gold up, dollar down, dollar up, gold. So it's an inverse relationship. That's true for a great deal of the time. But again, near the end game, what happens is we get into what's called a liquidity squeeze. So people seek the most safe asset that they can, and there's nothing safer than cash, accept real cash, and that's precious metals. But only 1 or 2 or 3% of the population ever act on that knowledge, and maybe only 5% even understand it or understand why or ever had any exposure to it, meaning a grandson of somebody, a granddaughter of somebody that lived through a situation like the Weimar Republic, and they've heard from their grandparents or great-grandparents or fathers and mothers that told the story about their grandparents, what they experienced during hyperinflationary depression, or more recently, if you're in Argentina, what's happened there a few times recently, or these currency crises that happen. I mean, people in Zimbabwe, I've done a video that is on the net. You can probably go to YouTube and search David Morgan hyperinflation. But when that Zimbabwe dollar was about equivalent to the U.S. dollar at one point, and they had like teachers that were retired making their 30,000 Zimbabwe dollars a year. That was their retirement. And at the time it was, it was enough, it wasn't like luxury living, but it was enough to be retired. Well, think of what happened to them. Now, I'm not predicting hyperinflation, but that doesn't mean we can't see the currency depreciate even further, where it is very detrimental to almost everybody, and that is what I expect. So that means that there's a lot of people that will be moving into the gold market over time, and there'll be a point at some time, probably 2016, where that accelerates, where people that are holding cash realize, geez, I don't want dollars. They are not as valuable, or there's too much problem with the currency markets or whatever. It could be a multiple number of reasons, primarily it'd be depreciation of the currency. And they'll move it into gold. Well, we see gold moving against the dollar, which it's doing now. And I said, what's going on in the gold market? So you're going to see kind of a choppy market here for gold and silver, I think. But again, constructive, mostly up. And I think that the key levels look for $26 in silver and $15.50 in gold. I think those will be achieved this year, but I'm not going to stake my whole reputation on it. What I do know is we're far, far from the ultimate high in these markets. These markets did accelerate a few years back, and that's a taste of what's to come. But that is just, again, a taste of what I see in the future, because in the future it's going to be probably the kind of move in the metals market that's going to go into the financial record books.
We seem to have a lot of fireworks brewing here in the currency world. You just mentioned hyperinflation a moment ago, and maybe we are starting to see the beginning of some sort of an endgame developing here. The Swiss decided that they're going to unpeg the franc to the euro. A lot of the euro money is flowing into precious metals. What do you make of everything that's going on there, and then gold and silver reasserting themselves as the true currency?
Absolutely. I mean, this is something that I've been forecasting on with others for a very long time, because the ultimate game before the end game is a currency war. And it started with the oil situation, and that brought the ruble to its knees. And then the Swiss said, well, Draghi's going to open up the floodgates to money printing, and they know what happens. And so they exited themselves from the euro peg so that they would be taken down the ship in this hyperinflationary, or let me say inflationary mode, that the euro is going to keep printing. So they exited that peg. And I'm addressing that in the latest Morgan report that will go out this weekend. I don't want to give away the farm. I'm certainly not an original thinker, although somewhat maybe. But there is a question about that I've brought to the attention of our subscribers that I think is one of the most important questions you can ask about these currency wars. And if you're very astute and reading between the lines, you may understand what I'm alluding to. But that is it, Mike. I mean, all these things are coming together where you see these wild currency fluctuations. Wild. I mean, look what happened to the ruble. Look what happened to the Swiss franc. Look what's going on in the euro market. Look what's happening in the dollar. And then you start scratching your head. But gold's going up against all of them. Why is that? And so all these things are starting to play out pretty much how I would have expected them if you would have asked me, what the end game looked like, 10 years ago. I said, well, this near the end, wild currency fluctuations, a lot less trust in the system, just volatility that's off the charts. I mean, today we get in the yen trade, for an example, the kind of moves that used to get over a year's time back in the currency markets. I never traded currencies often. I did some, but I I did not a lot, but I did some trading yen versus dollar. I was pretty good at it. But I know from my trading days when I was trading currencies, I was using metals, but where, like I said, the move that you see now in a matter of a week, stuff it would take a year to get those kind of percentage moves. So things are accelerating and changing and causing people to wake up to the fact that something is not right in the financial system. Something's not right in the currency system. Geopolitical situation is obvious if you pick up anything from the mainstream press and or alternative media. And so this just leads more and more to people that want what we all want, and that's certainty. So they are going to rush to something that's certain. There's nothing more certain than something that's been money for thousands of years. None of these currencies have lasted much more than 200 years.
Yeah, that's certainly a key point, and obviously we are seeing some big moves and a lot of volatility in these markets, and that could be a foreshadowing of some major things to come. Well, excellent insights as usual, David. I know you're a busy guy. Thanks again for always being so generous with your time, and look forward to catching up with you again real soon.
Thanks so much.
Well, that will do it for this week. Thanks again to David Morgan, publisher of The Morgan Report. As we've done in the past, we're offering free Silver Eagle bonuses for anyone who signs up for a risk-free trial of your newsletter. Our listeners can access this special offer from this week's podcast playback page at moneymetals.com. Check back next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.